Hey guys, welcome back to my channel. Today I'm going to be making a video about some things that you might not know about financial advising and about your financial advisor. So, have you ever asked yourself, how much does my financial advisor make? Most financial advisors make about 1% of their total assets under management per year. So if your financial advisor has $100 million under management, then they make $1 million a year, give or take. Some companies, some brokers will offer rewards to financial advisors that sell certain things, certain stocks, certain things that they're trying to push at that time. So they might make more than just 1% of their total assets under management. If you don't already have a financial advisor, or if you're not familiar with the financial advising world, successful financial advisors often have a set minimum investment amount to be able to do business with them. That might be $250,000, it might be $500,000, but they do that because if you're somebody who's just investing like $10,000 with them, they're not making a ton of money off you, at least not in the beginning. And if you put in that initial $10,000 and you're somebody who doesn't have a high income skill, isn't making a ton of money every single year, has excess money to put into this investment account with this financial advisor, and if you need more attention than the average $250,000 client, $500,000 client, then they're spending more of their time on you with less results. With that being said, don't expect your financial advisor to be spending tons of time on you on a daily, weekly, or even monthly basis. Now, smart financial advisors who take on clients that don't have that initial $250,000 investment, they're gonna be willing to spend more time with you to try and get more money invested with them. The way that they say it is, the more money they make you, the more money they make themselves. So you could likely expect to hear from them on a quarterly timing. You might be asked to come in for a quarterly review or a yearly review. They're not always going to tell you that their services aren't needed. If you're somebody who just has $10,000 to maybe $50,000 to invest, or less than $10,000, you could be spending extra time learning about investing and putting time into setting up a portfolio for yourself, and that might be more worthwhile than putting that money with a financial advisor willing to take you on at that low amount. If your financial advisor is explicitly promising a set amount of return for the year, that's breaking the law, that's breaking FINRA law. If they're doing that, I would steer clear from them. If a financial advisor says something more along the lines of, on average, they make about 10% return each year, that's legally fine. You'll likely see like 8 to 10% return depending on who your financial advisor is. Is it possible to make more than that investing for yourself? Yeah, it is possible if you know what you're doing and you're investing in the right things. What kind of returns you could expect to see, it really depends on what you're investing in, what your risk tolerance is, and what you're willing to, the amount of time you're willing to put into this, right? There are people who have gone on to turn a $1,000 investment into a $10,000 portfolio for themselves, or even more. There's people who are completely responsible for their own financial well-being and for their own financial investing, and I encourage a good majority of people to do that because you want to know what to talk about with your financial advisor if you do have one. And if you decide to be financially independent and invest for yourself, you're gonna need to know what you're doing. You should know that not every financial advising firm, broker, company is the same. There are some companies out there that have advisors or wealth management people who are CPAs, CFAs, and more. And then there's people who literally just have like a degree and a bunch of years of experience. Does that make one better than the other? No, not necessarily. It really depends individually on who your financial advisor is. And I definitely recommend checking reviews before you invest money with somebody. Do a background check on them to make sure they haven't got caught doing something terrible. A thing financial advisors won't tell you is that sometimes you can negotiate on the fee that they take, and the best way to do that is to be referred by a friend or a family member. It gives you more leverage when you go in there and ask to negotiate a fee, because if you go and talk to your friend or family member that referred you to this financial advisor, then the leverage is that you say something bad about that financial advisor to your family member or friend, then your friend or family member might get scared or upset and take out their money, whatever that amount is. And like I said at the beginning of the video, what the financial advisor makes per year depends on how much total money they have under their management. You should talk to many financial advisors before you pick one. Your financial advisor doesn't have to live in the same state as you do. You're gonna want somebody who usually has a bunch of years of experience. Something that can happen is that a financial advisor will want to retire, and in order to get out of the business, to retire, they will sell their book of business, their book of clients to another financial advisor, young or old. It just depends on whoever has the money to buy their book of business. So just be cautious about that. The results you saw with your initial financial advisor might not be the same results you're gonna see with the person who bought your original financial advisor's book of business. A lot of the successful financial advisors pretty much have their business, and in that case have your money and all their other clients' money on autopilot, unless somebody brings something up to them about something they want to invest in, something they want to change in their portfolio. So they're not always advocating in your best interest. If you're somebody who's younger that is investing, you're going to want to watch out for products that mix investments with insurance type of products. Those are real big money makers for firms, especially annuities. Advisors make out like crazy on them. In some cases, they might make sense for certain individuals, but more so not really for young people. Anybody like under 50, it's not a good investment. You keep your advisor in business. You're the one, you and all the other clients collectively pay for his golf lessons, for the kids' private tuition to school, allows him to have a 30-hour work week when he's 50, 60, 70 years old as a financial advisor. So if he's not putting the time in that, or him or her, putting in the time that you're seeking, then you can go and find another financial advisor and then see how much work they're willing to put in for you into your portfolio. So I hope that taught you a few things about financial advising and financial advisors. If it did, be sure to give this video a like and share it with anybody who might need to watch this video. If you have any comments or questions, be sure to leave them down below. And if you're not already subscribed to me, then be sure to hit that subscribe button. Until next time, I'll see you around in another one of my videos. Bye.